Hello, everyone. Welcome back to the rationalinvestor.com's weekend offering. This is the Broiler Chicken Show. It looks like we're live on YouTube, doing the YouTube thing. I see there's a few people over there. I disabled the chat just because it's so weird. If you guys want to, maybe as just a test, maybe you guys over on YouTube, if you hear this, can you just type in like a hello in the TRI Lounge chat room, and then that way, if you want to bark at me because the video's not working or something, at least I can see you. So maybe take the opportunity to do that now if you could. Hey, Stanimal, dude, I totally bought your stock the other day. I got filled on, and I mean, I suppose we could talk about it, but Timberline. I bought the Timberline. They had great little railroad tracks there. In fact, actually, the level oneers, they were doing candlestick patterns, and so I wanted to talk to the audience a little bit about candlesticks. And Stanimal had a great little stock that met the VCIM criteria, and we got to do another RSP meeting, dude. So I didn't know where you went to, but let me know what your schedule is. I know you got lots of kids and stuff, but we got to do another one of those. So that's what you get for being on YouTube and chiming in. Is I totally derail the conversation for 10 minutes. But while we're here, we might as well take a look. God, so many windows. So many windows. My head's going to explode. Which window is it, I wonder? It's one of these windows. There's my stock market window. Good old stock market, stock and stocks, eh? Jesus, wow. I mean, everybody, if you weren't watching this before, and maybe like you only watched the Broiler Chicken Show on the weekends, that right there, that's a whole damn course unto itself. And we just did the gap module for the level tours, so hopefully now, I mean, is this information is just so universal, it's so powerful, but hopefully all the level tours now can see market structure, and of course the level tours just did horizontal support and resistance, so you can see that's a level, and now this gap level. I mean, gee whiz, hopefully everybody can understand. I think this is what the French would call le brick wall of resistance. That is just I mean, talk about a trade location window. Maybe that happens on the other side of the election, who knows. But gaps, reload zones, market structure fail, key reversal fail level. In fact, I think the level one were doing candlesticks, and Grim was trying to show you key reversals. This is, I in the 5 years I've been sort of running this program. Can you believe it's been 5 years? Jesus. I can't believe. Well, I guess almost 5 years. 5 years as of January, February. Anyway, only seen this twice in the stock market. Saw it once back in 2015 when the stock market sort of rolled over there on the S&P 500, and now we see it on the NASDAQ. You don't see this every day. Weekly engulfing bar, extremely powerful message. So, if you are just tuning in, you're like, well, Brian, I only have time to watch these weekend shows. Everybody should journal that. I mean, just so powerful, redonkulous. And the irony of it all, of course, stock market's melting down, right? Can't give away bigger stocks. Here's the S&P. I don't know whether we are starting the recession, whether we're in the recession, whether we still have, another quarter or so to go to get to the recession. Trying to understand that the stock market is the ultimate leading indicator in our economy. It is. It is the thing that leads everything. So what usually happens is into the market top, of course, Joe Sixpack's feeling pretty good about life, and maybe they got a new job, maybe they got a raise, maybe they've been working for a year or two, so their bank account's starting to feel pretty good. Maybe they're saving money. Maybe they're even coming into the stock market because, they're feeling pretty rich and they want to play too. And the stock market breaks first and everybody hates it, right? Because in essence, it's the harbinger of the future. So I don't know whether we've broken per se, but I was really interested. I suppose if we just zoom in on something like this, you could argue that this was sort of like wave 4 of Alex's hyperwave conversations that he was having with everybody on the site recently, right? So this would be wave 3. This is wave 4. And you can see how we've decisively broken this fourth trend line on the S&P 500. Keep in mind, this is a monthly price chart, right? I mean, this is a lot of time. So, the one thing that actually surprised me through all this is the interest rate differentials. We have to keep a close eye on and this is the irony of it all. Of course, like politicians like Mr. Trump. And the sad thing is Mr. Trump knows this. I mean, if he's been in business for 20, 30 years and quote unquote a billionaire, he should know this. So, him getting upset at the Fed and raising interest rates, really, the Fed doesn't have any choice. The euro dollar market is the corporate interest rate market. And it's sort of, it dwarfs, the size of the market. If you actually look at the open interest of the euro dollar market, it's staggering how big it is. Everybody gets upset at Deutsche Bank for having a big derivatives book. Well, when I show you this, you'll understand why. I mean, it's just staggering how big it is. Where's the best place to show you this? I suppose we could just go to the CME. Where are all those links? I got them around here somewhere. There's CME. Oh, yeah, but CME doesn't exist anymore. Isn't that funny? No, my old links need to be updated. Anyway, here is the CME, and just understand how big this market is. Each of these contracts is $1 million, right? I think it even says here. Yeah. So the euro dollar interbank deposits having approximately $1 million in principal value for a 3-month maturity. Euro dollar, in essence, this is the corporate, right? It's the non-government arm of the interest rate market. And like GMAC. Has anybody ever heard of GMAC? They're a corporation that lends a lot of money in the marketplace, so they would be doing their business in the euro dollar market. So each contract's $1 million. All right, you ready to have your head blown off here? Where's the board? I'm not quite sure what all this crap is. Yeah, how the hell do we get a price quote? Euro dollars to products, clearing data. Clicks on something weird there. Is that what this page is? Okay, now I'm going a little crazy. Maybe it'll be in here. There we are, euro dollars. Yay! Okay, let's see what we got here. Oh, isn't that interesting? Those cheeky fuckers. They're not even showing the open interest. Isn't that interesting? Okay, well, I mean, I can't show you the, and I'm a bit surprised that they're not showing the open interest. That seems a little bit odd. But just on Friday's session alone, this contract traded 483,000 contracts. And you can see that's the December 2018, right? 600,000, 300. And each of these contracts is $1 million. How much money traded hands there just on that December contract? Anybody do the math? 483,000 millions? That's a bit of money, eh? So, I mean, I don't know. Here, I'll just get my calculator out. Let's figure out how big this is. 483,000. And hell, we'll just use round numbers, right? Times 1 million. All right, that comes out to that number. I think that's $500 billion. $483 billion. That's the notional value of it, but it just goes to show how big this market is. I mean, it's monstrously huge. And really what I should be able to do here, which is a little bit cheeky by CME, is a lot of people trade the market based on open interest. For some reason, they've just decided that they don't need to post open interest data anymore. That's a bit surprising. Let's see. I'll go to my old commodities. Let's see. These guys are usually pretty good. Let's go over here. And euro dollar. Where is the euro dollar interest rates? Euro dollars quotes. There we go. Oops. Interesting. There we are. Euro dollars. All right. Here's the open interest. Isn't that interesting how CME wouldn't even show us that? I always like these guys. These guys have been around forever. But look at the open interest. So this is the November contract. It's got 228,000. Look at the open interest here. 1.7 million contracts in open interest. Right? So we said that that's 483,000 contracts traded on Friday. So you can see pretty heavy turnover here, right? Look at this one. Jesus. 1.3 million contracts. So that's basically $1.3 trillion. That's $1.7 trillion right there in total notional value. So, you have to understand how big these markets are. And this is what really drives the credit market. So the bottom line here is when you hear people talking, bitching about the Fed to a certain degree doesn't really have a lot of choice. This is a type of environment where the Fed sort of ignores the euro dollar market. And the euro dollar market, here's where the Fed sort of, was in line with the euro dollar market. Here's where they disconnect it. This was the credit crisis and all that. And whenever you see the spread between the Fed funds and the euro dollars, whenever you see that spread go above 100, that actually implies that the credit markets are seizing up, right? And this is the financial asset crisis right there, September 2008, right there. So long and short of it here is the Fed, to a certain degree, has to respect what's going on here. And I think to a certain degree, they looked at the curve here, and they were starting to fall behind the curve, right? Through this period, you can see that the international, credit market was collapsing. The Fed was begrudgingly raising rates. They really didn't want to raise rates, but they were trying to stay ahead of this curve and not let it get out of control. So, and we sort of went through a period there where the credit markets were calming down from about middle of April or so, right through to the end of the summer. But the credit markets, the Fed was sort of getting in front of the curve, raising interest rates. They've been, heavily criticized, but you notice that the international credit markets are continuing to move rates higher. In essence, they don't want to lend money to the public, and they're going to charge more. And this is the conversation that the Fed doesn't really have any choice. And if they start letting this, W in earnest, and there's that magic 100 number, if we start getting up into this kind of stuff, then yeah, we probably are going to have a 2007 financial asset crisis. And the irony of it all, and I wouldn't be surprised if guys like Paul Volcker, we all know who Paul Volcker is, right? The old chairman of the U.S. Federal Reserve during the war on inflation days back in the 1970s and 1980s. He came out recently and he said, I can see the next financial asset crisis coming. I can see it. And frankly speaking, I look at that chart and I can see it too. And unfortunately, as economists, it's not really, because we can sort of see the future. It's a crystal ball. It's kind of cloudy, but to all intents and purposes, you can see, the economic writing on the walls. You've heard Brian squawking lots about looking for market tops here through this seasonal period regardless. But it is interesting to note that, guys, in the Fed, they see this problem coming. right? They see that the Fed doesn't really have any choice here. And the problem with this is it almost becomes like one of these kind of snowball effects where you can see this thing's, and, you all went through the Bitcoin bull market where, I always used to joke Bitcoin can't either finish or end a move without some sort of horrendous FU, right? And I would argue that, Bitcoin going from like $5,000-$6,000 all the way up to $20,000 in less than 2 or 3 months. That was sort of the big blow off top. Well, interestingly enough, you could make the argument that credit markets exact opposite. They really can't finish a move without some sort of horrendous thumping, right? And that's what this nonsense is over here. So, the snowball is gaining momentum. It's moving in one direction, and this probably won't end until the actual market breaks. The only sort of caveat that leads me to believe that we're not quite there at recession is the fact the yield curve is still relatively well behaved. If the Fed keeps raising rates, though, you guys hopefully will see that really the yield curve has no choice. You can see that bond prices, at the very least, yields are flattening here now. I might make the argument that we're starting to see M's in yields. Remember how we saw W's in yields coming out of the summer, led to that big bond market rout. Now we're starting to see very M-y type behavior. And then we look at the prices themselves, and you can see the W's are trying to come in here on the bond prices. So that means that, bond depreciation has, at the very least, calmed down. And I might make the argument these yields are probably going to come back into these areas if these M's, kind of like how you see these M's work their way out through here. And we'll probably see that kind of action through here. If, however, like we said, the market continues to demand that the Fed continue to raise short-term interest rates, and you can see little W's in here, that's not good. Then, we have to start thinking about how close is the yield curve to flattening. And then we pop on over here and look at our good old stock charts. Boom. Dynamic yield curve. That's pretty close. I mean, it's not there yet. And you can see that, in essence, the longer end of the curve rates are still higher than the shorter end, right? 2, 5, 10, 30, 2, 5, 10, 30. So, it's still sloping upwards. It's not crisis scenario, but you can see the Fed funds and Eurodollars are still moving higher. So that means short-term interest rates are still moving up. So hopefully everybody can see the pinch, right? The Fed doesn't have any choice. It has to be raising interest rates. And now we're starting to see M's come in on the longer end of the curve. So yes, the curve is still healthy. It's still normal. But we're going to watch and see whether this thing rolls over. So that's sort of where we are right now, which to me says that it's still too early for us to call a quote-unquote top in the market. And I'm wondering whether we're in sort of like this kind of phase right here where we'll probe higher to try and find that top. Did we just rally up to the top and now we're broken? Keep in mind that at this point, you can see the curve was inverted. So we don't have that situation just yet, right yet on this top. We're still not inverted. So it leads me to believe that there's still maybe another push higher. During Junior Bush's days, right, this was his curve. And you can see that, the market took some time. And actually, I think it printed the inverted like somewhere around there. It is there on that spike. But even in this case, right, it still took like a good 6 months or so for it to actually roll over and start to crank lower. Could we be in this kind of environment? Tough to say. Doesn't quite look the same. But the old rule of thumb is that, when we start getting into that inverted, then the clock is ticking. And really, recession is inevitable. I think we're close. And I also think, too, that this election has a huge influence on what's going on in the market. Now we're getting some really interesting media coverage and events and terrorists now, domestic grown terrorists now. And it's fascinating how if it's a domestic person all riled up and called into action to go and murder a bunch of people, well, they won't label it terrorist. But of course, if this was overseas based, oh my goodness, all hell would break loose. Anyway, you shake it. Quite shocked at the events that are happening between the gentleman out of Florida, I think it was, who was mailing bombs to politicians, and fascinating how the current leader of the White House almost stoked the fire of that audience in the responses that I saw, which I found fascinating. And such a great tell of sort of a lack of confidence type of environment. Perfect fear cycle peak. Nobody has any confidence in anything right now. But then also we saw a very bad event happen in a Jewish synagogue, if I'm not mistaken, in Pittsburgh, Pennsylvania yesterday. Regardless, tensions are being dialed up immensely here. Quite shocking, really. It'll be really interesting to see how the market reacts given that event in Pittsburgh, and I don't know whether the powers be have deemed that a terrorist event or not, but really, really tragic. Anyway, long and short of it here is market. I think, that we're actually, to me, and this is just my 2 cents. I've been sort of squawking about these AB equals CD patterns, very normal harmonic price action. We might find that the stock markets actually open up violently lower on that Pittsburgh news tomorrow morning. It'll be really interesting to see the way the world sort of spins, whether that was a terrorist event or not. It's fascinating to watch how the domestic politicians within the United States are spinning these events. Definitely an environment of fear. And usually in that kind of environment, of course, people sort of say, you know what, maybe I won't go and spend a bunch of money. I'll just sort of leave my wallet on my hip pocket, as old Art Cashin used to always say. Jonas here says it's been labeled a hate crime. So they're going to try and move away from the terrorist label and into sort of more of a sort of domestic crime, I guess. Frankly speaking, I can't comment on any of that. I don't know any of it, and of course, it's not my place to comment on domestic politics within other countries. But I got to tell you, man, from a trading perspective, you can't really write a better sort of fear scenario. And really sad heading into this election, too, of all things. I mean, just really, really. I haven't actually lived through an environment like this. So I know a lot of people are like sort of, well, what do you think historically is the norm? I got to tell you, this 21st century and what has sort of happened with political discord within the United States of America, I haven't seen an environment like this before. So it used to be pretty cordial and pretty polite. But we don't live in that world anymore. I've often made the argument that we might actually see this cycle end with the United States breaking up into a civil war. Basically, the last greed cycle saw the Soviet Union, which sort of was the ultimate sort of fear proxy out there, break up and dissolve into pretty much civil war. It wouldn't shock me if that actually was what ended up happening with the United States of America, but who knows? Sometimes these can go the exact opposite way, kind of like in France in the French Revolution, where it starts out as sort of a civil war, but ends up that they go on a major military rampage. And poor old Canadians, so you better strap on your hockey sticks and your dukes. It might be a pretty cold winter. But anyway, well, only time will tell. Certainly living in precarious times here, that's for sure. That's a whole bunch of rhetoric. Thanks, Brian. Not really useful, but nonetheless, there you go. Looking at the market now, I do, a couple things that lead me to believe that this is still more of a seasonal correction rather than the start of a recession. As we come down into these technical objectives, do you guys notice that there are bullish divergences now starting to form? They haven't confirmed yet, and I suppose on the event that they actually confirm, that's when we can actually start going and hunting longs. But it is interesting how, the bearish sentiment within the public is starting to rise. I thought it was really interesting just on, I think it was last Thursday or Friday, I was watching sort of the Asian CNBC broadcast, and man, they were pounding the table for the bearish case. Or I guess maybe it was the European version of CNBC. It almost feels like they were told to send a message that the market is going down and it will keep going down until we hit certain levels, and to really, really pump up that bearish enthusiasm so that, of course, the public will probably come out and sell at these objectives. And the irony of it all for the level 3ers, and really, most people that, we'll just leave it for the level 3ers. And really, I suppose, actually, we could even make an argument for the level 1ers too. Let's everybody get in on this, right? Hopefully, we all see that what's actually happened here is that prices, they've done nothing more than just bring price from an area that institutional players could not buy back down into an area where institutionals can buy. So ironically enough, you could actually start making the argument that we're actually starting to head into a buyer's zone here. We're getting location now. Good old Brian's second rule from trading. We really want to see some sort of sign of divergence. Can everybody see this? Actually, it wasn't a divergence, but it was a cute little W that came in here on RSI on this pullback. I suppose you can see the divergence here, made a lower low here, but did not make a lower low on RSI here. We want to see signs of divergence. And then ironically enough, my hunch is probably going to go something like a big old W, right? And then away we go. So I made that reference to level 3ers. They're now diligently working away on their harmonics module. And what everybody should see, and especially for the level 3ers, is that this is an AB equals CD, and this actually is what's called, for harmonic traders, a PRZ, or potential reversal zone. So we've got reload zones, and the interesting thing is, I wonder what would happen if we throw on an 88.6. Oh, hello. Now, isn't that interesting? 88.6 lines up perfectly with this AB equals CD. So the level 1ers this morning were kind of like, Grim, can you show us examples where extensions line up with PRZs? We've been actually using and I think it was, I'm not sure, I think it was Ian who absolutely fell in love with 88.6. But here I think you can make a pretty good argument that we have basically, off of this range extension. It almost looks to me like it's 1.618, but it doesn't quite correspond. I might have the levels a little off here, but nonetheless, this 1.618 sure looks to be the destination of this AB equals CD bearish harmonic. And that happens to line up really nicely with this candle body low. And actually the original, can everybody see the bullish engulfing bar here? So ironically enough, this was actually your sign that this is the bottom right there, that big ass bullish engulfing bar right there. And then you can make the argument that you can't chase. So, if you did want to buy this bullish engulfing bars action, hopefully everybody can see that this was basically the level that the institutions bought right in there, right? And it kind of makes sense too. They got the public probably all panicky and stuff on this move down into here, and they were dumping. And really, all they did was just take it down into this. Yeah, I mean, you could argue this is a really nice institutional fingerprint. The level oneers just did that. So the bar that made the ultimate low plus the preceding bar, this is basically where the smart money put the bottom in the market. Right there, all the way down to there. So, here's good old Brian's W, PRZs, reload zones, 88.6s. Notice that all that's doing is it's just simply bringing price back down into the original sort of bottoming window. So I'm still thinking right now that we are in a seasonal correction at that. That's sort of my big honking conclusion. The interesting thing, of course, here is that we've done so much technical damage that, we could very easily have counter trend rallies here that can actually translate into pretty big moves. I mean, let's assume that's the bottom. I don't know. But notice, if we do horizontal support and resistance, all level twoers just did this, right? The previous highs and lows. You can see this is going to be a heck of a battle zone right up in here, especially that fail level right there. You can see how the market came down into those lows, sort of put in this little doji and said, nah, I'm a bear. Fuck it. Down we go. So this area right here is probably a major area of resistance. And I wouldn't even be surprised if there's a gap right there too. Yep. So, I could very easily see counter trend rallies, maybe into the early spring, take us back up into that gap, into that wick up there. So, on the Dow here, that's 26,000. Here we are at 24,000. You could actually see a 10% rally in the stock market, and all it is doing is just simply taking us back into resistance. So, and then, and sort of what I'm thinking is we find some sort of bottom here, dead cat bounce, counter trend rally, and it's on this event over here, wherever the ultimate top is, that we actually see that the yield curve inverts and the stock market breaks in earnest. We really dump hard. And that's sort of the beginning of the recession. That's kind of what I'm thinking right now. So only time will tell. We'll see how it goes. But that's sort of what I see for the broader market. And as I'd said, because we had that pretty big event happen in Pittsburgh yesterday, it'll be really interesting to see how the equity players play this. We might start seeing just it could go actually two different ways, really. I've actually talked about this in the community before. I remember one year in particular, there was a British politician who was murdered. And it was really interesting. The stock market was really edgy. It was right on a precipice. Do you guys remember that, when that British politician was shot? That was about 2 or 3 years ago. And it was interesting. Right on that event, the whole market pivoted, because it was like, okay, people are going to be talking about her death and, how tragic that was. And they're going to be talking about, oh, we got to, string this guy up and, whatever, all that kind of, mob mentality talk. And they stopped talking about stocks. So I don't know. We'll see how this opens up this morning, in about 6 hours. It'll be really interesting. But my hunch is probably our path is going to look something like this over the next little while. So let's see how this goes. And as I said, obviously way too late to be shorting. And I think you're probably still a little bit too early to be buying. That's how I would look at the stock market. if you want to work stink bids at attractive levels, great. Use these pullbacks in the broader stock market to get filled. The irony of it all is the stocks that I want to buy, I can't get fills because these goddamn stocks won't come back down. Trying to buy this Big Rock Brewery stock just is stubbornly strong. I want to try and get in off the bottom end of the range. I want to buy this Mediterranean shipping company, same sort of thing, big gap down in reload zones. We'll see how this goes. I've been watching some of these blockchain stocks. Of course, I've got bids working on quite a few of these. I can't get a fill on my iMining, but I just got to be patient. I've also got a stink bid on this uranium stock. Actually, 2 different uranium stocks. And so I'm kind of hopeful that energy just calms down here and gives me the opportunity to get in off of these. And actually these are both VCIM names. If we did one of those RSP meetings, meetups, Stanimal, if you want to do one again, we can take a look at the uranium names. We talked a little bit about the uranium names a week or 2 ago. It was cool. We just did the gap theory module with the level 2ers. So it was really cool showing them this example of gap theory. And also too, because this was so fresh in people's minds, it was actually really interesting to note the sort of almost runaway enthusiasm about the uranium space up here. And of course, after gap theory has played itself out, you really, if we hit an exhaustion gap level and you look on your charts and you see this has got, at the very least, it's just simply, let's not get sucked into the euphoria. And sure enough, boom, 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 back down she comes. And the good part about this, and this is the great part about gap theory, is that once these gaps have actually been filled in, well, they're taken off the board now. So the fact that this measuring gap has been filled in now, the only gap that we have left open is from down below here. And, I could easily see the market come back down, fill this in, play around with these levels. But my hunch is that gap probably is going to be like this kind of gap and this kind of gap. They're probably going to, fish down in this area, but that's probably key support. And it's interesting how I think I told the community, if you want to participate in the uranium names, just get your bids working. And you should be able to join me. I don't know whether you'll be able to get a fill at 62 on this guy. But anywhere in this reload zone, you can see it goes 78.6, goes all the way down to 58 cents. So I don't see any reason why you can't work a bid here. And if you're lucky, you get a nice little stab lower. Maybe crude falls out of bed like $5 a barrel or something like that. Stock market's all unhappy, hits all those AB equals CDs, blah, blah, blah. And you can get a nice cheap fill here. And if anything, just such an excellent anecdote. I'm glad nobody in the community was chasing uranium names up top. I'm not going to be adding to this trade. I like this position. I'll just leave it in my RSP. But here's a good example where I'm going to use that exact same anticipated pullback to try and get a fill on this uranium name down at this gap. And all the same logic applies. Really nothing different here. So hopefully everybody can see good old reload zone, right? So nice dip into that reload zone should give me a nice friendly fill here. So that's what I'm sort of looking at of the uranium space right at the moment. And I still got this bid at 22 bids here down on this U308, but man, they really do not want to sell me stock down here. Let's see. It's interesting that I've got a bid working on this blockchain related stock, and I can't get a fill here. The DPW, we had a long working, it broke the bottom, and we just said we better get the hell out of there. And sure enough, this is often what happens on the other side of these W's broken. If I had done Nanny Nibbles kind of idea, I wouldn't really care about this. And we did that a lot on sort of, Schult coins through the winter and the spring. I think a lot of people were upset, but you have to understand it's strictly a function of whatever the portfolio trading plan is. Little old ladies, the only problem with stock market, if you're going to do little old ladies, is you got to make damn sure there's some sort of value there. Because the problem with stocks is technically they have no intrinsic value. So I don't know what's causing this thing to be driven into the ground. You know, maybe they're carrying a lot of debt. Maybe there's, they're going to have to raise more money through a financing or something because they're strapped for cash. But the long and short of it here is she's making lower lows. For me to be interested in buying this DPW back again, I got to see some sort of WE pattern. It will happen. The problem is, does it happen at 2 bits? Does it happen at 1 bit? You just don't know. And so that's sort of the scenario there. With regard to these stocks, if they break the bottoms, I think I have to walk away. It sucks, but it's, just a trader's life. There was one other one that actually, there's a couple blockchain stocks I'm still interested in. I really like this one, BITK. They announced options to directors at 25 cents and 33 cents, which is up in this area. I wanted to see this gap filled. You can see it's coming into that level now. So I can officially go out and start nibbling on this thing. And I might even just work a bid tomorrow morning at 20 cents and see if I can just sneak in off of the bottom of this range here. We'll see how that goes. Not a bad idea. Only 16 million shares out and is trading below book. So in this kind of scenario, I don't mind a nanny nibble because I can see that there's value in this name. The DPW's got just a shitload of shares out, and it's not. I don't see where the insiders are long this DPW, which scares me a bit. You can see we're basically in uncharted water for this thing. It's probably near some sort of bottom, but technically speaking, I just got nothing to work with here. So as soon as it does bottom, I'll start taking a look at them again. There was this one, they announced that they were going to use the blockchain to process medical records, which I think is exactly perfect. That's exactly what I want to hear from stocks, playing the whole blockchain story. But I had sort of tweeted out that, bullish bot setups were firing, etc. I think that those bullish bots are probably, cool your jets on those kind of thinking right now. And if anything, especially considering the way the broader stock market's acting, I think I'm going to be just waiting for some sort of deep ass pullback here now. I mean, it's gone too far for me to consider trading that. Like I said, there was a little bullish bot that sort of set up through here, but the move stop to scratch level was hit. So really, and seeing this gapping lower action, it's probably best that you just leave it alone here from a momentum perspective. And I'm going to be sort of shopping down in the reload zone if it can get its butt back down there. So there's nothing really in no hurry here, but I definitely want to keep him on the radar screen. All right. Anything else stock-wise? Here's another VCIMer that I'm trying to get in on. You can see the original double bottom here, reload zone. So I got bids working down at the bottom end of the range here on this ore stone. And then this is the one that I was squawking about with Stanimal there when we started the video. I put a stink bid in basically in the reload zone on this name. It's a VCIM. Stock was rolled back, options to directors, yada, yada, yada. And we got filled. The daily chart doesn't really look like anything to write home about. And frankly speaking, seeing all these holes in the chart here, at some point this thing's going to have to come back down here. And I wouldn't be surprised to see that happen into tax loss selling. So we're heading into the window where if you actually want to buy these VCIN names, this is exactly when the time of year you want to do it. That's why I'm talking so much about these junior stocks. This is exactly the time of year that you want to be shopping for these venture cap stock ideas, where tax loss selling is sort of creating artificial pressure on these things, that as soon as that tax loss selling season is over, the pressure can come off, and you know, like this is 10 cents, 20 cents just to rally up against these highs, fill in these gaps up here, gives you a free trade. And of course, I love free trades, right? So, and you know, I think you could argue you're seeing a lot of this in altcoin space right now too. They are starting to take off. Are they, you know, maybe in this phase where they're having their sort of initial dead cat bounces off of their lows, and then they'll do this kind of action over the next month or two? It's been sort of my thinking here, but you know, the market's going to do any old damn thing it wants. So you know, anyway, just an update. And what was what I mentioned when I said this was railroad tracks? Watch what happens when I change this to a weekly chart. I thought that was a bit surprising, right? Clearly, the market opened up, bang, straight down. So level winners, you all just did this today, and actually it was kind of cool because we were looking at a weekly chart of, I think, American Barrick or something like that. Some really, really great information there. So, you know, level winners, there's a good example of a weekly railroad tracks. And I know, I think Stanimal called this tweezers. To a certain degree, I would expect the tails to be a bit lower for tweezers. I like the way that this is nice and solid up here and solid right here. I like that as a railroad tracks reversal. And notice this tail here. So in essence, this now becomes sort of a buying window. And anybody who did short in here, but you notice that really shorter is not really that active here off the dailies. But anybody who did short or sold and said, gee whiz, maybe I should buy that back. This tail here is those trap bears. And, you know, if price does come back down into this area, that'll probably give them the opportunity to clean up those trades. So, you know, if you were short here, you're trapped as a bear here, a dip down into here, you're going to be a buyer. So that means that's buying support that should support that sort of level as support. How many times can you say support in one sentence? All right, so that's sort of stock market swing trading. Having a lot of fun. I got to tell you guys, I'm really, really impressed with this cute little model that we built recently. You don't take too many trades, maybe like one or two a week kind of idea, but just consistently in the market day after day, week in, week out. We left off last week. Remember, the end of last week, we had sort of thought that there should be some sort of counter trend rally in the Canadian dollar and in oil. We did see the counter trend rally in the Canadian dollar based on the fact that the Canadians raised short-term interest rates. It was interesting that on that setup, we didn't quite hit our profit objective. We had the modified bot rules. Grim likes to use those, and he sort of convinced me of the application of those rules to even trading things like 50% retracements. And we had the market move stop to trailing, and so I said, okay, well, we had this big red bar. You can see it painted an inside bullish reversal bar off of that. So I just simply said, look, if we lose this level, I think we probably ought to hop. So, you know, there's a really great example where, you know, the trade itself didn't produce $1 million in reward. But at the end of the day, you feel pretty good about the fact that, you know, you took the W, you took the setup, you followed the rules, and in this particular case, it was a 14-tick profit. Woohoo, 14 ticks. Well, that's better than a kick in the pants. Interestingly enough, the crude oil long setup that we were watching very closely through all last week. I remember I had sort of squiggly line theory, and I was like, well, I think it's going to dump and then W and then take off. It went a little bit further than what I was expecting. I thought it would ultimately bottom here, but isn't it interesting? Remember, Brian loves his candle body levels. Look how the market basically W'd right off of that level. So, you know, obviously this thing's a bit of a political football right now with Saudi Arabia and all of their wonderfulness, but I really like the idea of actually hunting the long off of this W and really like playing like the clothesline. Right, that was the W that I was most interested. It confirmed here, and so I was like, you know what? I think I'm willing to see if I can try and get in. off of that clothesline level and just simply risk to a break of these lows. So that's what this was. And then I got a nice little sort of powerful fractal reversal off of that level. So like first thing Friday morning, I saw this. I simply said, look, if the market breaks back above this candle body level, I wanna play this long. And frankly speaking, if you were like, well, okay, Brian, I'm more than happy to join you. There's no reason why you can't work a stink bid. My hunch is they're probably going to bring the market back down. There's another example of some trap bears right on that tail right there. So, be patient if you want to practice this swing trading and like, okay, well, Brian, I'll see if I can join you. Any kind of dip first thing Monday morning, especially if the stock market is weak. See if you can hunt any kind of sort of reversal pattern, maybe even drill down to like an hourly chart. And, any kind of dump back down below this breakout level, any kind of hourly candle reversal. And we'll keep an eye on this over the next day or two. We'll see if this paints a nice little entry for you to join me on that trade. Other than that, actually, I don't have any other swings working right now. Everything's really choppy. Stock market's trying. You can see the divs, right? You can see Willie was stupid. So I wouldn't be surprised. I mean, maybe there's one more dump, on that sort of political, well, not political, but, the synagogue event fear, maybe. It's tough to say. I think the gold short idea is still churning away here. Don't have any setup yet, but like I said, I think I said on Friday, I'm going to be watching this over the next few days. It's interesting to see, like I said, Canadian dollar came down a bit after that surprise rate hike. Kiwi has come right off here back against its original lows, and notice that Willie went stupid, just waiting for some sort of bullish divergence here to confirm. So we'll be watching maybe on the long side for Kiwi. And also Euro, right? You can also see Willie stupid. You can see the bullish divergence. I don't think I really like the idea of playing that big-ass fractal. If anything, you know what this kind of looks like is maybe a Joby gap. This might be a really violent swing here. No, well, I don't know. Is that a gap? Suppose I need send script here, right? Doesn't look like it. Yeah, looks pretty clean. 1435, 1430, 395, 395. No, so there's no gap here, so no Joby gap. If anything, probably over the coming, Monday, Tuesday, probably into sort of Wednesday kill zone. Let's keep a real close eye for those people that are interested in the euro. Let's keep a really close eye on this candle body low level. My hunch is if there's going to be a trade that sets up, it's going to set up off of those candle body lows there. So let's throw on a little RLZinator, right? And gee whiz, what a coincidence. Reload zone is right off of those candle body lows. So let's keep an eye on this guy here through the week. My hunch is there's something developing through here. Again, if we had sort of the initial Monday morning pullback, a little bit of fear injected into the market, you might get a pullback into the crude, which helps you get into that, and you might actually see a trade actually set up on the euro. Don't have anything set up here, but I definitely, in fact, here, why don't we do our little squiggly line theory? My hunch is we come down into here, put in a nice W, and away we go. So let's keep an eye out for that. Okay, so that's basically broader stock market. I suppose we could get into a whole bunch of big stocks, but nothing really. We sort of talked a bit about that here. My sort of forecast here is we're not quite done these technical objectives, but we're getting close. Too late to short, too early to buy. Bitcoin. Now, the good part about Bitcoin lately is it actually has calmed down quite a bit. And it's let me sort of get my head back on straight. When Bitcoin gets all nutso, ironically enough, a lot of the work that we were doing on the site and stuff, through, I think it was about the end of the summer of last year to pretty much the summer of this year, we were completely distracted, right? It was just crypto, everything crypto. So if anything, it's actually kind of nice that things have calmed down a little bit. I never know with TradingView whether these data points are correct or not. Actually, and this isn't even TradingView, beg your pardon, but it is TradingView sort of chart program. Let's maybe just do a brand new one. Sucks because, man, I had so much cool data on that old one. And maybe let's try and do stamp. And let's go weekly. All right. I got to tell you, just first blush, I'm awfully impressed at the fact that the market is trying desperately to hold this. All the level oneers, you could actually use this as not a bad example of a railroad tracks bottom. Right? Market comes screaming down, doesn't leave much of a tail, opens up, straight back up, and then takes off. So hopefully everybody can understand why the market found a lot of support in here. And this is Bitcoin Dad Garzarelli or whatever his name is, his low. This was Brian going on vacation, and then on vacation watching the market shit its pants, come right back against all these lows. So in essence, there's basically a whole year of price action. Obviously, somebody is very, very interested in this level. I guess the problem that I have here is that, if we spend a lot of time on this side, we may have to do the exact opposite on the other side, which sucks. I mean, I was talking with someone earlier today about triangles. And hopefully you guys can see how significant this floor is. I've also seen a lot of talk sort of online that people expecting a rally up to get everybody rah bullish, maybe on that like ETF news, and then a dump to wash these lows, something like that. That definitely is a possibility. I'll tell you guys, this is not where I would like to see the market for me to say, yep, we're in the process of bottoming and the risk is completely removed from the market, which sucks, right? Because I mean, geez whiz, we just went through a year of shit. I would hope at least, right, we'd actually be at an area where we could say the risk has been taken out of the market. If we just do a nice simple Fibbo, right? Let's even maybe just go back to the, let's do the 2014 range, right? Actually, that's even a bit high, isn't it? Oh, look at that. Right on. Hey, way to go, Brian. All right. So, call a spade a spade. For those investors in the world, I don't mind if you're just going to slowly put yourself on a dollar cost averaging regime. We are in what I like to call the reload zone, 61.8 to 78.6 fibs. But notice that zone does imply that we could both have a wash of the highs, right? Which I think that was basically what that was. And also a wash of the lows just to stay in that zone. It's totally realistic. As well, if we look back in history, we got one hell of a powerful railroad track signal there. And as we sort of pointed out earlier, gee whiz, that's 88.6. Everybody loves that level. I know that there's one gentleman on the site who actually I had the fortune to climb a mountain in Switzerland with. And he would love nothing more than for Bitcoin to come back down into this window. That would make him exceedingly pleased. If anything, what I'm kind of thinking, especially with this tail and the railroad tracks and this high, is if you are of that mindset, make damn sure that you have your bids working. Because my hunch is, and Bitcoin loves to do this, right? My hunch is that one of these stabs is going to look like this, right? Stab down, oh, it's the end of the world, right? But by the time the week finishes, price rallies back. Stabs down, oh, it's the end of the world. By the time the week's finished, and everything's fine. Stab down, oh, end of the world, right? And back up. Stab down, oh, no, it's the end of the world, and back up. So my hunch is whatever the ultimate FU low looks like, it's going to be one of these funny ass tails. We'll see what happens. And if anything, and what I'm sort of, this is the debate right now. And I think Thomas is sort of the same sort of thinking is, are we here where we're sort of fluttering around with these lows and there's one more fuck you to go? Or did we make it through the window and now we're through here? And we're probably sort of like there right now. Frankly speaking, I don't know. And I don't think anybody really ultimately knows. But what I do remember was that when we went through this period, people were starting to talk about 51% attack on Bitcoin. I don't hear anybody talking about 51% attack on Bitcoin right now. I distinctly remember we did not hear a 51% attack talk here. And also remember, this is October, November, and then December tax loss selling. So, this is on November 3rd. This is November 10th. So this is kind of what I'm thinking we're going to see here. Is, we came down against the low end of the range. We're going to rally up. We're going to put in a W. Everybody's going to be like, oh, that Brian Beamish guy, he says W's are the shit, man. You got to buy it. You got to buy it. And they're going to get bitch slapped. So be careful here, okay, guys? I don't know whether we're out of the woods just yet. It feels like we're still a little bit early. Hopefully I'm wrong, right? Get the market to prove Brian's wrong and put in a nice W and start making higher highs and higher lows. I can live with that. But statistically speaking, I would say that the odds of that happening, really right now, I would argue, the odds of the market either breaking higher or lower of this range, right? I think basically it's a coin toss right there. And really, I might even argue down into here. This is literally a coin toss. And man, they sure have built up a lot of expectations. I thought it was really interesting. And what I'm worried about here is there's going to be fuck you. Maybe that this is the bullish fuck you. Everybody go long and break their hearts. There might be a bearish FU. We might dump and then rally back, and then that's actually the lows. I don't think anybody can really tell you what's going to happen here. Lots of guesses. And I thought it was really interesting. There's a guy on Twitter that I like to follow, and we actually brought him on a year or so ago and had him explain to us his Ichimuku, Ichi Boom Boom. I think I even retweeted it out that what I'm really worried about right now, this guy, Brotoshimuku, he sure loves his channels and charts and stuff. But he put out a tweet the other day, which I thought was so apt, and I just retweeted it. He says, when we finally do get, quote unquote, the move, I'm going to stay off Twitter for a few days. Either side of the bull-bear sentiment will be insufferable with the endless told you so tweets. You know it's coming. Oh, my God. And really, it's going to be a mess out there. And, oh, my God, the egos, it's insufferable. So be prepared for that, okay, guys? And really the irony of it all is that who cares? I mean, let the market do its thing. As you can clearly see here, if you were just patient and disciplined and waited for the market to actually start putting in higher highs or higher lows, and like I said, I had one site member a year or two ago, is a very wealthy gentleman now, and he went like 20x long on OKCoin on this pullback right in through here. So let the market put the bottom in, and then you're like, okay, well, at least we got a floor with, and we've got a situation where we got higher highs and higher lows. And what do you think, guys? Do you think he was fairly happy at his position? I think there was a bit of money that was made there, eh? Do we really have to be such a hero and be able to call these marks individually? I don't think so. Right? If anything, just be patient and let the weekly W's form and develop and come in. And then on the pullbacks, that's actually when you get your really fucking kick-ass buys. So it is interesting that this breakout happened on one of these U.S. Marshal offices auctioning of Bitcoins. I do know that there is one coming up. If we get some sort of insane bullish action that breaks the market out and we actually have confirmed weekly W's, I can always, let's say hypothetically, just like that chart, right? We get a zip up to, I don't know, what is that, 9,000. I can always hunt pullbacks, right? You can see where our reload zones will be. I could always hunt, there's the original market structure, 78.6. In this particular case, the pullback was, I think it was almost like a textbook mountain man. Oh, where's that high? And actually, I did this the other day, right? Actually, I think that what we want to do is the fib off of this low. Yeah, that produced that 61.8 there. So, this is the kind of action I would be kind of hoping that we would see. We're not going to chase this. Woohoo! Bitcoin's a bull again. Fucking A. And then on the pullback, and, this somebody posted in the lounge a moment ago, Wyckoff. This is textbook Wyckoff. So, and, quite often these bottoms never look totally pretty. But in essence, there is your accumulation. There's the breakout. And this is the check, that Wyckoff check. And this is actually where, if you want to take the trade, that's really where we want to be really concentrating on. So long and short of it is, this is the kind of price action that I want to see for us to know that, yeah, this is a bull. And right now, we just simply don't have it, right? We're just sort of treading water, and this is dangerous, right? I believe it or not, I think I would have preferred that they actually brought this thing all the way back down to, remember, Goldman Sachs put out the big buy recommendation right here. I would have preferred that they had brought it down here and then done this, and then that would make me feel a lot better that this is the bottom. What I'm worried about here is this, this still has a bit of risk involved in it. I'm not going to say this is easy at all. So if you are hunting longs here, just be light on your toes. If we start breaking down, odds are we're probably going to head after and test these lows in earnest. And I think the general message to our community was, let's just leave this thing alone. If you want to take your long shots against these lows, great. We've had lots of opportunities to work stink bids and get filled off of these lows. We break these lows, and you're probably best just to hop off. There's Mr. I want these $2,000-$3,000 lows, and then I'll be happy. Speak of the devil. So he just joined us in the lounge here. Okay, so, and really, the message on Bitcoin hasn't changed, guys. It just hasn't changed. Nothing. If anything, it's awfully difficult to have these conversations with you week in, week out, because the message just hasn't changed. And you just got to cool your jets and just do nothing. Don't fuck around. You got to wait for the trend to officially turn. before we can all start getting super ridiculous bullish again. Now, that doesn't mean you can't go and have some fun trading in the altcoin market. I've strapped on, trying to play this potential turn. I picked 3 different altcoins that I'm actually actively trading versus little old ladying. The Decred sitting up nicely on the position. Stop is on scratch right now. Just let it work. The Verge basically sitting right at our average cost, just not doing a heck of a lot. And the Zcash sitting up just a little bit from where we bought it, but same sort of logic, not really doing much, kind of just doing exact same thing Bitcoin's doing. So I happen to have some proxies on here. We came really close to hitting our profit objective on Decred, but it didn't happen, so we're still in the trade. And if any of these things do happen to move ahead of Bitcoin moving, well, okay, fine, I'll take the profit or the loss, so be it. As I had said a moment ago, on a name like Decred, we have no reason to be losing money now. So if this thing does come down to scratch, I'm just going to walk away. But Verge and Zcash, we still technically have risk here in these trades. And I'm just going to let our money work, and live by the sword, die by the sword. It's the exact same logic as Bitcoin. For those people that are doing little old lady nanny nibbles strategies, wow, there is so much money to be made in this market. It's ridiculous. I actually wanted to talk to you guys about Barrick and Gap. Well, I guess we'll leave this for another day. What did I want to talk to you guys about today with regard to alts? I would just simply say, just build your shopping list, right? I would argue almost vehemently, IOTX pumped during BCS. IOTX. All right, this is on Binance. Pump, I don't know whether I would use the term pump, but it looks like they're having an okay day. And really, Jonas, I think I was actually pleased to hear that Jonas is starting to book some doubles along with quite a few of our sort of newer people to trading, which is great to hear. Love that. Hopefully everybody can see Jonas's W that came in here. And, this is a message to guys like Frank Stefan. I had sort of said, and, really, I think the basic thesis was 2018, generally speaking, for like crypto and Bitcoin is a consolidation time. But that doesn't mean you can't make money trading these things. And here's a great example that if you just, maybe you had hunted that W, way to go, kick-ass trade. But even if you had just simply drawn reload zones, seen this breakout of this W, and, fundamentally, maybe something about the coin story, I don't know. But you just hunted reload zones and just said, you know what, I'll work my bid at, good old 78.6s, and you get just a kick-ass frickin' fill here. The point of the matter here is that we didn't get it in this spring. There was a spring rally, but it just didn't translate into much, which I think disappointed a lot of people in this space. But hey, that's the market for you. But here's a great example of at the very least, sitting 300, pressing 400 here. If you were able to sneak in around 200 or so, what should you be doing right now? Should you be buying this thing right now? All right. Is there anything in particular that good old Brian would like you to be thinking about? Coffee. Well, everybody thinks about that. Brian has to fill up the coffee cup. And you get some beautiful background music as Brian fills the coffee pot. He now turns around and pours the water into the coffee maker. The coffee maker is now full of water, and now it wants some coffee grounds. Oh, geez, what a mess. Yuck. All right, coffee grounds go everywhere. Brian's coughing. Now he is putting the filter in the coffee maker. Hope you guys are all enjoying the intermission music. Let's all go to the lobby. Let's all go to the lobby. Let's all go to the lobby and get something to drink. All right, coffee is now coffeeing. Yeah, where were we? I think I left with a question. You'd be selling half on a double. Very good, David Robinson. Make sure to have those open orders working. Excellent, David Robinson. Well said. Jonas sold at 2x. Good. Gets paid. All right. So hopefully everybody is... And I don't know where the Broiler chat is. YouTube live chat is disabled. Yeah, well, right there, David. You're doing a great job. And if anything, you know, Grim kind of disabled the chat for a level 1 class, and I really liked it because it sort of keeps us focused. So if you are watching on YouTube and are like, man, where's the goddamn chat in here? It's because I can't see 20 different screens at once. I'd love to. So I just turned the chat off, and then that way everybody can... just like David did, I'll show you. There is the TRI Lounge, and so I can see what David is saying here. Thank you, David. So, you know, the point here is that little alts are having some fun here. If anything, I used to work with a guy who used to always say, you know, Brian, make hay while the sun is shining. I don't know whether any of you guys are farmers. We used to actually have... a few years ago, we had a guy who actually was a farmer from like Illinois. What was his name? I want to say, anyway, can't remember his name. He used to have a little sheep icon. But anyway, the point of the matter here is if you've ever tried to go and make hay while it's raining or while the ground is wet, it's almost impossible. So farmers can only really go and make hay when the sun is shining and the weather's nice. And this is the same thing in crypto. I mean, hopefully all of you learned a really hard lesson that when the market is frothy and it's toppy like it was last winter, is there a heck of a lot of money to be made going long? Not really. I might argue that we're now in an environment where they've basically thrown everything away, and here's the kick in the pants. Just because the price of this thing is down, does it mean that this IOTEX name? And Jonas, I guess, do you know the story behind this? Jonas, I put him on the spot, and now he's all like, oh, no, you actually want me to talk? Oh, Jesus. We could probably do the coin checkup. But what I'm just trying to say here is odds are, I thought I had it on here. Yeah, there it is. All right, let's go plug this in here. IOT, what was it? IOTX, this one? Holy shit. 1 billion coins. So, you know, Brian, he's not going to like that. The price hopefully better be damn cheap. What's the price? Oh, yeah. So, you know, can you see the connection between price and the amount of coins out? You know, if this thing was 10,000 sats and it had like 10 billion coins out, I'd be like, oh my God, you got to be kidding me. So if you get up into that sort of billion plus neighborhood, the price better be damn cheap. And really, I guess what we need to be really asking is what's the market cap, right? That's probably really the more pertinent question. And $32 million. Okay. Long and short of it here is if they're actually building a network that has intrinsic value, will it ultimately be worth $33 million? Believe it or not, in sort of a world, like, what was the size of the U.S. lottery? Isn't there like a lottery that they just had? Anybody remember what the size of that lottery was? Yeah, it's like over $1 billion. So if the lottery is $1.5 billion, then what does that really mean about $1? Or maybe what I should say, like when I was growing up, if you were a millionaire, well, hey, you're the shit. It sounds like to me, yeah, take out the M and add a B. So, in my day, I suppose, a market cap of 2-3 million. What am I trying to say here? Maybe $33 million if this actually is a global entity. And if it is, I guess what they're saying here, they're in talks with Microsoft. Oh boy. This is similar to like that SLM, Stellar, XLM. I can't remember what the symbol is. XLM. Same sort of like logic, right? That if it actually is going to become like an infrastructure kind of thing, well, geez, these things can have market caps of billions, no problem. And I made the argument about Bitcoin, right? That, if the lottery is $1.5 billion, well, then Bitcoin itself could easily be in the trillions of dollars if it's actually like how do you say this? Like part of the infrastructure of our society. Could easily be in the trillions. So, and this also too is a function of sort of old man Beamish. Remember, I lived in sort of that last century. The value of money is not nearly the same. In fact, I was joking with somebody yesterday. The education programs that we do for level 2, level 3? I'm charging you guys like basically $160 a month for these programs. That's ridiculous. Plus, you get all the site services and stuff like that. I mean, in this world where the lottery's $1 billion, maybe I have to rethink my math here. And lucky for you guys, right? Take advantage of old man Beamish does not understanding the value of money. So, well, and the good part about it, yeah, lucky you're done, but also your grandfathered on the site, Thomas. Yeah, I know it was even cheaper when I first did this, but anyway. So the point also too, we have to take into consideration the value of money itself, and this is an ongoing sort of mental problem that I have, right? Is, like our classic stock market screeners, 20 million. I love those. I mean, that seems to work. So I do like the idea of structure. But what I found with crypto is they can justify having gazillions of bazillions of coins out if the price of the coin is just like dirt cheap. And that's kind of like my Verge story, right? Everybody knows that I'm long Verge from like 2 sads, right? And then out a gazillion coins out. Obviously caveat emptor. Obviously, you are participating in venture capital here if you're playing in the crypto space. But I might make the argument now, and especially if anything, this is an excellent testament to why I don't like to participate in the ICO kind of nonsense. But I might argue, not now, but especially through here, the relative risk in this name was basically taken out. At this point now, it's critical that we should have sold half on a double. and get yourself into that risk-free trade as fast as possible. Once you get into that risk-free trade, then the sky's the limit. And actually there was one that I was looking at this morning I wanted to show you guys, and that was this STN. I woke up this morning and people were reporting, oh, wee, look at me, I got a double, I'm so slick, I'm the man, I'm the shit, right? And I was like, way to go. And I mean, look at that. I mean, that's a damn fine looking W. What do you think, guys? Do you see all the shit that I'm trying to teach you guys in these courses? Do you see it here? This guy actually put in his W down here, right? Just beautiful. Look at that. It tested the level once, twice, 3 times, and then away we go. So the point here is that, and I found it amusing. The person was actually like, oh yeah, as a first, I waited forever on this thing to get my double. Well, I mean, if you're selling half on a double now, then that means that you were forcing yourself to be a buyer anywhere down in here, and that means by definition that you didn't even really buy. Like, let's say you bought it in March, right? That these lows down here. In essence, you had a March, April, May, June, July, August, September, October. What is that? 8-month hold. And the funny thing is, of course, in crypto, 8 months is forever. That's like literally 3 or 4 generations. In classic stock market land, people really wouldn't be too concerned with having to hold an asset for 8 months to get their double. And now, and congratulations to whoever the person was. If you sold half on a double, basically your risk is down to 0. And really you have no risk going forward after that. Your risk is 0. And the cool part about this, guys, and this is how, we used to go crazy on the site, how Brian took $500 and turned it into hundreds of thousands of dollars. Hopefully everybody can see that there is a lot of upside potential on a name like this. And we're not even asking for the market to go to new highs, right? There's the old highs. The irony of it all is that my hunch is if this thing's any good, they'll probably take a serious run at these highs. Candle bodies, right? Wicks and tails like to be eaten. But even if we just use conservative objectives, and this is great for the level 2ers because they just did this. I was joking with one of the level, or actually some of the level 2ers, that if you'd only worked on TRI for like the past year, you haven't seen this kind of market before. We've spent most of the past year, maybe this one. Actually, you know what? Which one was really good? Actually, I think that VIA is probably pretty good. That's good old Romano's coin. But if you want to get into, well, does everybody know the Romano story? Oh, goodness. But, here's a really good example of what we've been doing on the site for a long time now. And that is looking back on charts and using gaps to try and help us find trade locations to be buyers. Right, look at this juicy gap right here, right? Doink. There might also be a gap right there. I don't know. Might be a gap there, but let's use this one for argument's sake, right? So you're like, okay, Brian, I'm not going to chase this name. But if I'm going to work a stink bid, where should I be thinking, right? And that gets you sort of buying in here, right? And there's your rally. Woohoo! And we've been doing a lot of that. And there's this, I think IOC was one of them that's been doing it recently. Yeah, here's a good example. This thing's come all the way right back down to its original bottom, and I know guys like Joshua and stuff, demon gap hunters, all that kind of talk. You can see, look at that. There's a big gap right there that needed filling in, right? Just like that. So let's see where, oh, look at that. That happens to line up there. So what do you think? You see the market up here and you're like, nah, there's a gap down here. I'll work my stink bid. When we're up here, people are like, oh, there's no fucking way that thing is ever going to get back there. But sure enough, do you see how just waiting for that gap gave you a pretty good fill there, right? What do you think? Does anybody see that? Level twoers, right? This is exactly what we just did yesterday. Right, Alex? Alex, you're in level 2. Yeah. So the interesting thing is that now we're in an environment, and like I said, most of you new people to the crypto, you don't realize this. Now we're in an environment where all we do is we just flip the chart around. And we do the exact same fucking logic, just going the other direction. Isn't that incredible? That's a trader's life. I don't know. Did that resonate with anybody? Because really, that's in essence the whole that's the market for you. And just as people were absolutely nutso bullish up here and could not imagine this happening, well, exact same scenario, people were nutso up here, it's going to the moon, and, this could never happen. Well, I would say the exact opposite now. Now and does anybody know what this is called? Where we actually start stair-stepping our way higher and running into these objectives. There's actually a specific name for it in the market. And the irony of it all is, no, that's not yet. Distribution comes in, through the actual, this part right here, right, where it's already climbed and it goes back and forth and then dumps, right? Climbing the wall of worry. Very good, Chris. Excellent. So ironically enough, the only way that this chart can actually move up and actually fill in these gaps is people actually have to be like, no, there's no way that's going to happen. No way. No, are you kidding? Don't buy it. No, are you kidding? This is so risky. Do not buy it. Remember, up in this part of the market, everybody was like, oh, fucking, you're all going to make $1 million. Just go throw your money at the market, guaranteed. And this is what happens. Now we're in the type of the market where everybody's like, no, this stuff's shit. You're all going to go out of business. No, it's all a scam. And we end up climbing the wall of worry and just basically going in and filling in all of these gaps. It's just the way the market works. Get used to it, guys. This is capitalism 101. Now, this was a topic that we talked about in yesterday's class, in that we can actually use the gap as sort of a range, in this particular case. And so what you should see is if we use this gap as sort of the top end of our range, you'll notice that we have like reload zones come in up here. Wicks and tails like to be eaten. Has anybody ever heard Brian talk about wicks and tails like to be eaten? You can even see there's a cheeky little gap right up in here. So what you should start to see happening is now all, exactly the exact opposite of everything that we did on the way back down. Now you should start doing it all on the way back up, right? Where is it likely to bottom, right? So now it actually becomes the exact opposite where, whoops, where did that chart go? Where is the top? I love the idea of you selling half on a double. Get yourself into a risk-free trade. And then, if you want to put your next order, sell a third on a triple, sell a quarter on a quadruple. It doesn't really matter. The long and short of it here is just let your money work, especially if you're in a risk-free trade. Just let your money work. And you might see things kind of like this candle that just popped up out of nowhere. I didn't hear anybody saying that this was going to happen last week. Did anybody know ahead of time that this candle was going to happen like this today? I don't think so. Just let your money work. All right, so, excellent example of the market slowly turning. Take advantage of it, people. You all put the time and effort in over the past year, right? And some of you are really lucky that you actually started your education program in the winter when the market was really toppy. You did what Graham and Brian asked you to do, paper trade, get really good at trading setups before you actually start risking your hard-earned capital. And here we are, 10 months after the last peak, and the market, I think, is just literally handing us trading ideas. Literally on a daily basis, I see this shit coming in. So enjoy this market, people, please. And what I find really interesting is now that the market actually is a buy, and when we should all be most excited, we're seeing the site participation levels really dropping off. It's so ironic, guys. I mean, please, people later on, you're going to be watching this video, maybe after tonight, tomorrow, whatever. Journal this. This is exactly what happens year in, year out. The money is made when the public is not interested in this shit at all. Most of you that are on this site, I would still consider generally the public. We have a small, growing little army of really good traders that are doing great work. But, they head off on their own way. Nobody's, there's no gun being held to anybody's head to stay here. So understand that a good portion of our population is still what I would consider new people to trading. It doesn't surprise me to see the site participation backing off here. But don't lose focus, guys, please. Right? If you want to make money from trading, right? Well, now's the time when you got to really buckle down and stay focused and hunt those W's. And when they come in, hunt trade location. Hunt structure, hunt divergence. I mean, really, I suppose one could argue we look at this IOC based on what we've learned in the course. I love the idea of nanny nibbles, little old ladies, blah, blah, blah. But do we have any W's here yet working? No. There's no hurry on a name like this. Great little old lady nibble. Will this thing be rallying and busting to new highs tomorrow? I don't think so. But will it move back up against these levels some point in the next 6-8 months? Absolutely, without a shadow of a doubt in my eyes. Is there a statistical probability that this thing could go off the board? Yes, there is. Don't put all your money into any one name. That's just foolish. But the long and short of it here is kind of like what the site community is showing you here this morning. There are some really, really good-looking little W's coming in here. Take advantage of them. I know Joshua this morning, he was pounding the table about a couple names. Where is your... oh, there you are. So VIA, and that's good old Romano. If you don't know who Romano is, go look up ass eating. Yeah, I mean, location-wise, little old ladies coming in here, I don't have a problem with that whatsoever. Yeah, I suppose it's a pretty wide W. Can you see, Josh, how they left a gap right here, though? This is probably one of the ones that I'd be happy to work stink bids. You can see they left a gap. And hey, typical Romano, right? Remember, he's total operator, right? So you can see where the levels that he left, where these are almost like his fingerprints. And I think they're pretty stinky fingers too, aren't they? But that's another conversation for another day. But if I was going to join this party, I don't mind working bids down in these areas. I think we're starting to get signs of, well, not really. Well, okay, so there's a bigger divergence that developed here. I certainly like the direction of volume. We're no longer stupid. So like I said, don't chase. Please, people. Nobody's allowed to chase. If you did want to entertain the idea of joining Romano, I think you throw on your reload zone. We can even, if you want to, I think we even sort of for fun, we're calling this sort of like the altcoin reload zone, 78.6 to 88.6. And gee whiz, that lines up with the gap there nicely. So, if you want to be thinking about working bids on these names, excellent. No problem with that whatsoever. Do not chase, right? What's your other one? REP. Oh, good old, this is Augur, isn't it? Yeah, I haven't looked at Augur in a while. See what it looks like on Trex. Yeah, okay. Location, you can see basically down at the bottom end of the trading range. Excellent. This guy's had a history of breaking people's hearts, though. I remember this through last year. A lot of people got really upset when it broke these lows. But you can see the counter trend rally. It also looks pretty expensive, too. So, but at 22, the first question I think that you have to ask yourself is, what price do I have to see to get a double? Is that realistic given where we are? So if we're 22, a double is basically 44. So that's up in that area. Is that a realistic level going forward? Not bad. So nanny nibbles? Sure. I don't have a problem with that whatsoever. Trading setups? I don't know. I think we just moved to a new low here, didn't we? Yeah, we just made a new low. Very powerful reversal down in here. So this is almost the same as your other one. I think if I wanted to be joining the party, I'd probably be working my stink bid. Yeah, there you go. So 78.6. Looks like there's even a bit of a gap right there. Where's the gaps? There we go. Yep. So there's a gap right there. So if I wanted to join these guys, I think I'd probably throw my stink bid in there. Get some sort of big FU candle, maybe to come down, test these candle body lows. If your bid's at the gap, then nice fill. So that's where I'd be thinking there. As well, too, level twoers just did horizontal support and resistance. Interesting how this level there is support, that level there is support, that level there is support, and we have Brian's candle body levels for trade location. So, if you are interested in this thing, I like anywhere between about sort of like, it looks like about high 18s, mid to high 18s into the 19s. I wouldn't chase up here. I don't think that would be a good idea. Okay, so I've been blib-blabbing away, talking for about an hour and a half. We looked at a couple half-decent names for you to work stink bids on. Great to hear people banging out doubles on names like this SDN on Cryptopia. Fantastic. Way to go, guys. Actually, I wanted to, before we leave, this was sort of an additional piece for the level tours. We talked about gaps as levels yesterday. Really good example of gaps repeatedly happening at about the same level and lining up with reload zones for excellent trade location. And then also, the level tours just did horizontal support and resistance. And I thought this was really interesting. We could actually apply the cluster kind of concept to gaps and, draw horizontal lines off of them. I would like to see all you guys do that. And hopefully what you see is that gaps and clusters of gaps also line up with reload zone. Excellent trade location tool. And actually, for the level tours, the class that we did yesterday, I actually went and found a bunch of extra resources for you level tours. So there's a little bit of extra reading from outside sources just in case you wanted validation of stuff that Brian talked about for you to chew on before Wednesday's class. So I did have some people that were kind of a little bit on the fence about gaps, which really surprised me, but nonetheless, you can't please all the people all the time. So I've added a few more extra pieces to try and help you articulate using gaps in the trade process, both as trade firing tools, the Joby Gap, Doji Gap setup, but also things like how we can use gaps to validate levels for trade location. And then also I added in also another conversation about, well, actually, I wanted you guys to practice the gap theory with bar charts versus the candle charts, because the candle charts just produce so many gaps. So I included the Barrick gap theory chart off of bar charts. So Joshua and Alex, I know both of you guys are in the level 2. So I would like for you to go and hunt gap theory setups off of bar charts for this coming week as well. So I'll give you a bit of a fun assignment there. Okay, I think I'll leave the conversation at that for today. I hope you guys enjoyed it. I hope you got a bit of value out of what we talked about today. Going to be looking for a little bit more weakness out of the stock market before we officially mark the bottom. Probably the pivot's going to come right around the election. It wouldn't surprise me. Commodities, yeah, I'm a bit sort of soft on them right now. No pun intended. Swing traders, completely different animal, just simply hunting setups, regardless of what market it is. But as I said, things like the uranium stocks, I think they all need to calm down a little bit. So not a big surprise what's going on there. And of course, the venture cap names, I'm actually using any kind of weakness that we have into the end of the year to try and actually be a buyer. So go figure. Crypto, just keep on keeping on. If anything, I really like the fact that Bitcoin has turned into a stable coin. It makes me feel a little bit more comfortable about the longevity of the story. We haven't officially turned the corner yet. I still think we're basically in a trading range. So I'm not really rah-rah bull or rah-rah bear at present. I think we're just stuck in a range. But at the same time, take advantage of that sort of quietness in the senior names and go have some fun in these junior names and knock out doubles, because these doubles are coming fast and furious here now. So just enjoy this time period. It looks like we have a little bit of a rally window here. If you were buyers of altcoins the whole way along, just go through your order book and just make sure you've got those open orders to sell halves on doubles working. Make sure that you got Tom's script running and Microsoft Scheduler and stuff up and running, so that the orders are continually being refreshed. And if anything, I think maybe we're going to get a nice little gift here. I have a funny feeling the first couple of weeks of November are going to be friendly to Bitcoin. And by default, we'll probably see our blow off top action here in the alt. So. Okay, I'm going to shut up now. Have yourselves a great afternoon. Off to Liam fairly shortly. I'll see everybody in the lounge. Nice to see you, Thomas. Say hi to your brother for me. And the only thing left to say, guys, is a big bye for now.